Do you want to be richer than your wildest dreams? Well, you've come to the wrong place. That's right. We can't help you with that, but we can show you this portfolio and see how it might impact your life. So stay tuned. We'll catch up with the next update for Denise's portfolio. Check it out. No mucking about. We'll get straight into it. So we'll put another $1,000 into Denise's portfolio on the 4th of August. It's now the 14th of August, so 10 days that I haven't done an update when I should have. But there's a good reason for that. I was working on my custom shares application program, and I've been working on the second version of it. It's been pretty full on, trying to get it better, make it less time dependent on my terms to put data into it, and so far it's going great. So I'm just going to keep going with that, but we will be having regular updates again. So we did put another $1,000 into Denise's portfolio, and we invested into Westpac Banking Corporation, including any extra dividends that we had left over, which I think was $13 something or other. So that's gone up a little bit. The stock market in New Zealand has been quite volatile of late and hasn't really performed very well. And traditionally, August and July, for that matter, are not big dividend paying months based on the top range of stocks that we have available. So, keeping that in mind, September is a great month, and to date, it's been the best month that I've had on my own personal portfolio. But we put $1,000 into Westpac Bank because I believe they're undervalued, and I'll show you why shortly in a sec. So essentially all of these companies have had $1,000 put into them. Barramundi has gone down backwards. That's investing in Australian stocks via Fisher Funds. That's right, Fisher Funds. However, for the long term, they pay dividends every quarter, so I'm not worried. It's just going to carry on. We'll probably put some more money into that, but for now it's okay. Spark has gone down a little bit there, as you know, from $1,000. It's going to pay out some money soon. I think September and March it pays out normally, but it's the end of the day, we're still getting money. So according to Sharesies' new estimated thingamajig, what's it? $8,000 invested. Overall, our unrealized gains are $148.74, so not as good. As good a profit and return as we had in a few previous videos, but still we've made some money. We're up on from where we were, so we just got to keep going with that. So according to this simple return, $1.85, if we click on that, it gives us a breakdown of what the total return divided by amount you've put in times 100 equals simple return. So, and it's even breaking the numbers down, so it's quite a nice little calculation I've got going there. So we're up regardless, and we'll just keep investing. And we have a look at the chart. You can see we start off with $500 down here. We put in a further $1,500 to make it up to $2,000 at that point. We were down $48.25, another $1,000. The market kind of recovered. We've been up. We were up as much as $236, $306 at that point, and then it started dropping down at the start of July, dropping down, up and down as it goes. That's the way it goes. And the last month, yeah. So we'll be ready to put some more money in the next few days, which will be great, and we'll get it over to $9,000, so just about the 5-figure mark, which will be fantastic. Looking forward to that. So here we are into my custom application. You'll see that we've got exactly the same companies, exactly the same market value, and except this time we've got a little bit more detail on them. So we've got the overall profit and loss from these thingamajigs here, and this says $108.54. I've still got a little bit of work to do with some of these calculations on this, because they don't actually technically add up as they should. Well, I think it does, but I just need to sit down, spend some time, go over the numbers thoroughly, make sure it all works out, because these numbers, I think, do not include dividends. So they're basically, it's based on the market value of what's been purchased and what the current value is now in comparison with the market value. But because the dividends get reinvested into the portfolio, into whatever stock is the flavor of the time, then it's kind of neither here nor there really. But really the main thing here is the market value of the whole thing. We can see down here on this column here, we've got the total dividends paid. So I've got basically a running total of what's been paid for all of these stocks. It doesn't actually have a total down here. I'll have to plonk that in at some stage. So we've got that. We've got some recommendations. All this data is coming from Yahoo Finance. I've basically automated this program so it is getting the information directly off there. The previous version I had to do some copying of data, plonking in an Excel file, loading the program up, reading the Excel file. It was just a pain in the bum. So we're not doing that this time. We're getting the data directly. There's a database behind this application which will populate stuff, and I can look at stuff and do all that sort of stuff. Makes it a lot easier. We've still got some useful things on, for example, the NZX 50 charts, because I just want to see roughly what the market's been doing in recent times. So according to this, in the last week, that's the New Zealand top 50, well, whatever that number represents, I can't remember. The index rate, whatever they, it's gone up to, it's gone down to, whatever they, talk about. So basically in the last week, it's gone up a little bit. In the last fortnight, it's definitely recovered, made a recovery. Last week, hasn't really done anything based on that. Last month, it's gone up a little bit. The last 6 months, it's slowly creeping up. And over the last year, you can see here that it has gone up, and we sort of reached a peak just at the end of January when things were looking rosy. All of a sudden, splat, things are not looking as rosy, and it made a bit of recovery, then it dipped down, then it's made a bit of recovery, now it's a bit flat. But like I say, dividends, that's what we're looking for here. We're not looking to sell these stocks. We're not looking, over time, this is going to just keep on slowly going up. So it's neither here nor there. The price of the stocks will go up, but dividends is what we want. Now, if we can make 4 or 5% dividends, we put $100,000 in, we'll make $4,000 a year in money that we don't have to go to a job for and work for. So if we go back, have another look. Daily change, that's always going to change on some of these stocks here. So it's really more about the 50-day moving average and the 200-day moving average for these stocks. Ideally, we want them to be in the green moving forward. We've also got a price target column here, and this is based on, this is the median average of a bunch of analysts and what they recommend the price. So in this case, for example, according to the analysts, Heartland Group Holdings here is $1.57 is the price target. Currently the price is $2.12. So they believe that it's 26% overvalued on the actual share price at the moment. And that's based on them, the professional analysts, looking at the how well the company's doing in comparison with its competitors, their debt levels, all that sort of stuff. They make their calculations on it. I'm just getting the average of what they suggest, and I'll make my decisions based on that. Because if we have a look at the Westpac Banking Corporation, we can see down here that supposedly it's 40, according to the analysts, it's 40% undervalued. So maybe we should be buying that. Should we be buying that? Well, I don't really know. So we'll have to think about it. And that's the case with all of these stocks. If you're going to buy something, you need to think about it before you buy it. What is it going to do? You need to think, is it going to go up? Is it going to go down? Are they going to be out of business in 5 years? Is there a potential competitor who might come along and steal their market share, thereby dropping their share price, and that might not be a good investment? So you've got to take these things into consideration when you do buy stocks. Denise's portfolio, my personal portfolio, I've got 48 different stocks, which essentially covers the New Zealand top 50. I could have just bought the New Zealand top 50 index fund, but I'm not going to learn anything by doing that. Just plonking money into that. And it's much more fun when you've got a whole bunch of different stocks to look at. So some of these stocks, I have very little money in them, i.e. $11, I think, in New Zealand. But we're not concentrating on my portfolio. We're looking at Denise's portfolio, which has been built from scratch for this very purpose of creating YouTube tutorial videos on what we're buying and how they're performing, so you, the viewer, can hopefully learn something. Hopefully I can learn something at the same time. So on the average, our average dividend yield here is 4.78%. That's pretty good. I'll be looking at investing in things that pay at least 4% dividend yield. Some of these don't, such as property for industry. But the reason why we bought that one, and also Heartland Bank, well, more property for industry, is because they pay once every 4 months. Every 3 months. So four payments over the course of a year, generally. And generally for property for industry, they pay in February, May, August and November, which are generally not very good paying months. So I wanted this portfolio, or Denise wanted, should I say, to have some payments coming in on those particular months, which I couldn't get from most stocks, which generally in New Zealand pay in March, June, September and December. So that's that. So we'll go and have a look at the pie chart when that, ideally when that loads up in a minute. And we'll just see what that looks like here. So let's go and have a look. Okay, so there we go. So it's mainly financial services, and that's because Barramundi, Marlin Global and Kingfish make up the large majority of that, and also the other one, what's the other one? Heartland Bank. So there's our 5 stocks, or our $5,000. We've got the consumer cyclical, whichever one that was, I can't remember. The real estate, which is property for industry, and communication, which is Spark. And that one must be, I can't remember, but we'll have a look. Consumer. Can't be too many of those ones. And we just got to wait for this thing to load up again. Does take a bit of time sometimes. Turners. Okay, that's what it was. Turners Automotive. And they should be paying a dividend in October. So we've still got another couple of months to wait before we get some money off those. So we've also got the earnings date down here. So these companies, well, 3 of them, Spark, Property for Industry and Heartland Bank, will be coming up with their earnings information in the next week. And then they'll be supplying their ex-dividend date, assuming that they are paying dividends, and we should be having some money coming into this expected payment column, which will be awesome. And we'll just carry on with those, so that'll be great. So that's about it for this one. Now I was going to show the Excel spreadsheet breakdown of what we've got, but pretty much this covers it anyway, and there's probably not a lot more to say on this. So I hope you enjoyed this video. Happy investing. Keep on going, because it's always, it's good to save money. You can always take it out and spend it on stuff if you need to. And it's better to have money than not to have money. So take it from me, living with no money for a majority of my life, and now I've actually got some money. It's fantastic. It's a good feeling. So I hope you enjoyed this. We'll catch you in the next one, and we'll see you later. Bye.